What if money, like in terms of payments that we use, would drive climate action, would protect the environment? So if I wire you $10 on PayPal, what if it would protect 10 trees or 1 ton of CO2 just by doing this without any cost, without any effort? And that's why I started KUMO, to really building a solution for myself, but also for a generation that is caring about climate.
Hey, what is good, ReFi Nation? John Ellison here with ReFi Podcast, bringing an episode with Robin Klemens, the CEO and founder of KUMO. KUMO began as a natural capital-backed stablecoin project with a vision of redesigning money to allow everybody to pay for their goods and services with a currency that actually protects and restores nature. They've gone through an intensive process interviewing project developers and institutional capital allocators and have landed on an intermediary step of providing a lending protocol that allows people to deposit carbon credits, in this case tokenized, into KUMO in order to receive a loan in the form of US dollars or euros, in actual form of fiat with no crypto involved. This has garnered some significant interest from even tier 1 banks who are looking to lend against carbon credits and to get exposure to nature as a diversified asset in their portfolio, with increasing regulatory pressure and also interest from other banking sectors to push capital into nature and to really move away and to decarbonize these portfolios, which have a huge carbon footprint today. I think this really stands as a key pivot point for the regenerative finance movement as a whole. This conversation mirrors that of the one I have with Adrian at Senkin, to see these founders journeying to discover product market fit using the power of Web3 for just the right components of the puzzle, and sometimes not at all, recognizing actually we have this complex, audacious challenge to solve of climate change, and we need to use the right tools at the right time according to the readiness and maturity of the market and the different actors that we're called to serve. At the end of the day, this conversation goes pretty deep into the intricacies of both project developers and institutional capital allocators and provides some very interesting insights about where this market could go in the next 12, 18, even 24 months. Hope you enjoy the show. Drop us a review if you do, and we look forward to hearing what you think. Thanks. Robin, how's it going, my man?
Very good, John. Good to see you.
Dude, it's been a while. Good. I was looking back at our meeting in Paris a little over 2 years ago, or 18 months, however long now, and just realizing what a journey we've both been on. And I'm super grateful you'd carve out time during a very busy part of the year just after COP to share with the world what you guys are up to, man. It seems like you've really reached a kind of inflection point in your journey.
We did. And also when you shared the picture, now I'm sitting here in the very rainy Amsterdam. Different times, but still same ecosystem. So glad we both meet again here, John. The last 6 months, they have been tremendous for us. Lots of tears and sweat, lots of success. And I'm happy to unpack this today.
Amazing, man. Well, for those who don't know about KUMO, what are you guys building?
For the ones that know us already, we pivoted away from the nature-backed currency model towards a lending marketplace for carbon credits. So we match funders, climate financiers in the voluntary carbon market with borrowers, which are these carbon project developers. And what we do at KUMO, we collateralize spot and forward carbon credits to provide carbon secured loans, and this way break down the climate financiers by finance barriers by reducing the risk, lowering the cost, and really help scaling impact.
Okay, interesting. So I'd be curious to first look at like this original vision of a nature-backed currency for a second, which I know you guys have pivoted away from. And it sounds like the pivot has given you a lot of traction, and that momentum may end up taking you towards this direction. If you've got a bunch of collateralized loans with carbon credits, spot and forward, there's an interesting prospect there. But what was this original vision that drew you into making KUMO a reality?
I'm in this ecosystem or DeFi ecosystem for many years. And in 2020, I transitioned to the intersection of Web3 and climate, where I co-chaired a special interest group at Hyperledger, researching and piloting use cases around supply chain transparency, climate and carbon accounting, and also climate finance. We did many pilots, but we always struggled to find the business case, which is true for many projects in this sphere. And I also looked into retail because I myself, climate change is also a problem to me. I try to do a lot, but still Sometimes I need to take flights or need to do other stuff. And so there was an idea that I wanted to start before this nature-backed currency, which was focusing on how can we try to incentivize more sustainable behavior on an individual level, with providing everyone with data so we can make informed decisions. Many of the things that I learned from these surveys with 30 people was, we all know that climate change is an issue. We care about it. We want to do more. But our day is fully packed. We have so many things on our plate: family, friends, career, investments, and so on and so forth. And we don't have the resources to really take care of climate change as much as it's needed. Then I kept thinking, well, how could climate action be or become effortless? I sat down for many, many hours and weeks and read also many books around finance in general. And the solution is money all the time. So money is everywhere. It's the denominating factor of our systems. And then the idea started coming up, well, what if we could redesign money itself? What if money, like in terms of payments that we use, would drive climate action, would protect the environment? So if I wire you $10 on PayPal, what if it would protect 10 trees or 1 ton of CO2? Just by doing this, without any cost, without any effort. And that's why I started KUMO, to really building a solution for myself, but also for a generation that is caring about climate, but also has many ambitions, and is willing to do something, but also we're limited in our capacity. And so that's where KUMO comes from. And to explain this, like this nature-backed currency idea, it works like a reserve currency. Like the US dollar was backed by gold, we would use eco credits, like carbon credits from the voluntary carbon market, and similar credits to really back this currency as collateral. And then we would have a derivative product, which is the stablecoin, that we can use in our everyday lives.
It's, very much the holy grail of the regenerative finance dream, this, nature-backed stablecoin that everyone around the world can use to pay for everyday goods or services. And like you described, it is kind of the penultimate behavior hack, where it's like, if it's just what you use to transact and store value, and its circulation and issuance in society is directly correlated to the restoration of nature, then our economic system, which is so wildly out of balance with the natural world, is suddenly in harmony. And yet, I'm curious to hear, what were the obstacles that you guys found in actually bringing this vision to life? Because a lot of people have been chiseling away and approaching this in different directions. Charles Eisenstein has been talking about this for many years. I'm curious to hear what your adventure was like from this initial vision to where you guys are now and this recent kind of inflection point that you've experienced.
Yeah, I'm happy to. So we started KUMO at the time when Token and Clean kicked off. I think many projects originated during this time. Everyone was bullish, so it was easy to attract people in our team to join us in our mission. We started building, but then, of course, Vera hit everyone hard. So there was no collateral available anymore. Then some quality concerns were unpacked about this tokenized carbon credits on-chain. Crypto bear market hit, inflation. So many things changed. We kept building, but also we struggled to find customers for our product, because the good and the bad thing for DeFi is, depending on where you are, it's very much running in cycles, and they are amplified in both directions compared to other markets. But when there's a bear market, you really just don't find traction with most of the products. And finding traction in a bear market, that's product market fit. We couldn't with our stablecoin. So we started looking around, okay, who are our customers? We need someone who wants to borrow against carbon credits. The idea at start was, it's DeFi money, it's DeFi tokens, it's tokens from you and me. We use it as a MakerDAO tool to just get fresh liquidity against our crypto assets, and then either leverage or reinvest in something. But these customers are just not there yet. So we looked at, okay, where are these carbon credits coming from? It's the carbon project developers in the voluntary carbon market. There are a few that are quite open to Web3, but the market is not there. And now you need to educate them around, why should they tokenize? How do they do this? What is a private key? How do you manage your wallet? How do you on and off ramp? So it's like hundreds of things that they need to take care of. And what we figured out is that there's lots of interest from these project developers in borrowing against their carbon credits. Spot credits, that's the ones that are issued but haven't been retired, but mainly the future carbon credits. So the projects that are registered and will receive future carbon credits. But the only thing they care about is getting hard cash in their bank account and going from maybe a centralized exchange, on-ramp into a stablecoin, get carbon credits, borrow against, get the KUMO stablecoin, go again to USDC via Uniswap to then off-ramp again. This is like 10 steps to get money in your bank account that even we struggle with sometimes and are annoyed by doing this. Then you need to do all the accounting around your crypto transactions. So that was clear. There's traction, but the stablecoin and DeFi is really in their path, in their way to getting access to these solutions. And then it's also where's the money coming from? When you manage your own stablecoin, it's a little bit different. What you need to do is you need to make or work on business development for your stablecoin. You need to find utility traction. You need to have users of your stablecoin. Now in a lending model, it's pure matching funders with borrowers. So you need someone who wants to invest in this market, wants to have capital to this project developer, and then receive a yield. So we started interviewing, I would say, at least 50 financial institutions, banks, asset managers, pension funds, hedge funds, all from traditional finance. So the good thing is they're very interested in digital asset technology. The bad thing is they just cannot do it because regulation is missing and they don't have compliance or risk process in place. Sometimes they don't have the knowledge and capabilities internally to do it. But there's lots of interest in the carbon market. There's lots of interest in sustainability-linked investments. And there's also pressure coming from, I'm based in Europe, so from the European Union, demanding these banks and financial institutions to decarbonize their portfolio, which is 98% of their carbon footprint. And they have clients from wealth management demanding for sustainable investment opportunities. However, they just cannot do stablecoins, and it's very hard to do DeFi at all. But they want to get exposure to this market. And so what we figured out is there's these project developers that need funding. It's an unbanked sector. It's a financially underserved sector that would maybe touch DeFi, but to be honest, they don't want to do it to get funding. And then we have lots of money in the institutional financial side that wants to drive funding to this market, but they cannot as of today. They cannot in DeFi, but they cannot do it without DeFi because it's an imperfect market. It's a market that is a global market and different rules in every market. So sourcing all these credits, assessing the risk and delivering funding at scale, this is extremely challenging for every financial player. And so we identified the problems on both sides and then really thought, okay, how can we provide a solution to them? And now it's the fact, do we need DeFi at all? So really, we're at this point where we are questioning ourselves completely, looking into the eyes. What have we done the last 12 months? Why did we do DeFi? Do we need it? And so and this was like also emotionally a very intensive period because you start naive with a vision. You want to really change the world. You have this perfect solution in mind. You find traction, but then no one uses your product. And it was like, okay, here we are. Do we want to do this? Are we still motivated? Is it still our mission or vision to really drive change and drive funding into this market? And how can this first step be part of the larger journey towards this nature-backed currency? Payments was something we don't need on-chain payments because the issue for these project developers is not that it takes too long to get funded, like in terms of the settlement of the transaction. It's not an issue for them that they don't get 24/7 access to funding. It's an issue that they really don't get access to funding. If it takes a day or 2 days for a transaction to settle, that's not a pain point for them.
Sure.
But at the same time, the voluntary carbon market, especially these carbon credits, it's very difficult to price these assets in an 80% OTC market with over-the-counter deals. So you don't see it from the outside. You need to call these brokers, these trading desks, and ask them for the trading data. And also trading makes the price. And there is currently not so much trading. So these price indicators are sort of weak. And we have the equality concerns and issues in the market. So here comes the promise of DeFi and tokenization of carbon credits. We have a solution or technology in place that can overcome some challenges that we face in the traditional carbon market. By tokenizing these carbon credits and the concept of automated market makers and liquidity pools, we have a spot price of carbon credits. We know how much we can sell these credits, for how much we can sell these credits into. We also know how much it costs us to pay these. It's updated 24/7. That's very much needed for a financial product like KUMO. But also we have now the ability to attach additional data points and values to these vanilla carbon credits, which would then allow us, this is more like in the future, to have MRV data directly feeding into carbon credits, having these audit trails attached to these carbon credits, ongoing everything. So this is where we are now. We need tokenized carbon credits. And this is for me also the next level of the tokenized carbon credit movement. The companies like Solid World, Zuka, and Thello, they have been working hard to build a solid infrastructure that we can use. They are starting, Pure Earth is connected. Solid World is doing this forward financing with Thera and Gold Standard. Everyone is still waiting for Gold Standard spot credits. We hope to see this soon. But there's an infrastructure layer. And here comes the promise of DeFi and all the composability. We can build products as layers on top of these tokenized carbon credits with all the enhanced capabilities I mentioned before, liquidity, there's like fast trading, we have prices, we can have these values attached. So what we use these tokenized carbon credits as collateral in our lending marketplace. And yes, the project developers need to tokenize their carbon credits or their forward credits and deposit them as collateral to our platform. But that's the only thing they need to do when it comes to smart contract interactions. Then all the loan payments and repayments, that's done in fiat money. So now you're a bank, you want to drive funding to this market. You get access to new collateral. Everyone loves collateral because now you get the ability to manage risk. You have collateral that can be reliably priced. But you don't need to touch it because it's held in custody by KUMO, by a bankruptcy mode SPV, or you can always get access to it if needed. The risk is separated from our business risk, and you get exposure to this market. You can drive funding to where it's needed, but you don't need to over leverage in risk by touching all these DeFi products. And the project developer, they receive cash in their bank account. They can use it to reinvest into their projects, to start scaling their efforts, to have working capital and growth capital in place. And they can repay it in cash when they sell their credits.
Super cool, man. I love this. This is the epiphany moment everybody in ReFi has been looking for, is that breakthrough that satisfies the needs of all the different parties and can really, build trust in this market and get capital flowing to where it needs to go on the ground. And so what I understand is there's quite a large supply of carbon credits on balance sheets for project developers and I guess other organizations all over the world. I think I read somewhere on your website or in your materials is like 10 billion euros worth. And so this is kind of latent capital that cannot really be realized or leveraged in any other context. And suddenly if they can tokenize it using one of your partners, deposit it into KUMO, then they can use this in order to receive a loan in cash, in, as you call it, fiat, to pay for whatever operations and further project development they need, which could end up being quite a virtuous cycle. And I guess they also have, clear visibility around the value of those assets. And you're also connecting, the broader DeFi market to these carbon credits so that they can be more accurately priced and, increase efficiency and volume. And it feels like a kind of a flywheel moment happening here. What's been the reaction so far in terms of parties that are interested? Who's actually seen this stuff? Like what's been the market response? I know you guys did a launch at COP28. So yeah, let us know what's been the response.
Yeah, so we're swamped in demand. That's a very good thing for us. We're very surprised to see, especially the interest from the financial industry, how much interest there is in the carbon markets. I wasn't sure about this at all. Like in the summer, if someone is looking at it because of this imperfect market and other risk, but yes, there's appetite. And for these project developers, they're really in need of funding. So at the moment, their options are you can use equity money. Equity money is always super expensive.
Yeah.
And the alternative is to pre-sell your carbon credits, these pre-purchase agreements. But to quote one project developers I talked to from Gabon, is they cut out too much flesh because they really have too heavy discounts on these carbon credits. And then the project developer ends up in being just a service provider. But I mean, they do it to protect the environment, but also these project developers, they want businesses. So they want to participate in this market. And if you pre-sell all your credits, then you don't participate anymore in any price appreciation. So they're very happy about an alternative funding solution for them. Not saying that all of their projects would be funded via debt or secured debt, but it's an alternative for them to still be in this market, to leverage future emissions as collateral to get better access to funding. So COP28 was a success. We're working through all these follow-up meetings. We launched from COP28. Nice. This was also a very nice moment. I couldn't be there in person this year, unfortunately, but my colleague was there. And then we had a stage there where we could dial in and make history live from COP28. We will share this shortly with everyone.
That's awesome.
Also, we worked together with a tier one bank from institutional finance to really, the key thing we need to do is we need to be open to what is out there in the market. Otherwise, we build too idealistic solutions, maybe too radical solutions that just won't be used. So for us, it's really the key, and we're doing this for months now, working with these institutional leaders, listening to them. What is the interest in the market? What are the problems in the market? And what is also the interest in the market? To then work with these, run POCs and pilots. We need to be patient because we cannot mess this up. It's a financial product. The voluntary carbon market has enough bad press already. So now having a financial solution that over-leverages everything and then just ends up in a sort of gambling casino, that's not what we can build. We need to build a sustainable solution that works properly with patience, working with these institutional players, maybe sometimes at their speed. That's not the speed we're used to in DeFi, but also there's so much momentum in there. And if we as ReFi can convert a handful of players in traditional finance, that's driving volume. That's still where the money is. And we need to get this money into the carbon market. And we don't need to get it into DeFi. We can get it into DeFi and then to the carbon market, but we can also get it directly into the carbon markets and other future markets.
So nice. I'd be really curious to hear what some of those aha moments with these institutional actors were. You shared a second ago around the project developer in Gabon saying, they're taking too much of your flesh as you're pre-selling these credits, and then they don't have an upside in the market as a whole. They're just a service provider. You seemed almost surprised in a way at how much appetite and interest there was from these markets. Were there any key insights in your interviews or any recent conversations that can really illustrate kind of the position of this particular segment in the market?
We have all these projections from the growth of the voluntary carbon market. There are many large names, McKinsey, BCG, Morgan Stanley, Bloomberg, all these large numbers. But to me, I've read all these reports, but is this real? I don't know, because if you look at the market, it's just not reflecting what everyone is pretending or projecting. But the key insight to me is that these reports are needed for the financial industry to then plan their strategy to allocate resources. And this is the shift we're in at the moment. Many of the banks that we talk to, they don't have yet carbon trading desks. But I can tell you that I would say at least 60-80% that we are in touch with, they are bootstrapping trading desks in the carbon market, which is a first step for them to really enter this carbon market. So there's interest. There's also long-term allocation of resources to enter these markets. And another aha moment was really talking to someone from a bank about the issues they have when it comes to dealing with DeFi. And they run an Ethereum miner as part of their innovation department a couple of years ago.
Okay.
So it was the proof of work. They received some, I don't know, let's say 100 ETH, and they wanted to off-ramp this then to basically the bank's bank account. And this took them 18 months just to off-ramp ETH into euros. And this was, to me, okay. if we want to do crypto and we're a startup, so one ray is a thing, right? You cannot have 18 months to work with one customer. It's like, okay, so they want to do it, but even they say, well, it's so consuming, even for the people within the bank, that they also sometimes lose faith and motivation in their innovation work because it just takes so long, which then really, it was also this like reflections moment where I thought, well, maybe we need to start without stablecoins and add them maybe later. We don't know yet. We will see. There needs to be a market pull to build this. So this was also something. And in general, the openness from the carbon project developers in sharing basically their financial situation, in be willing to support us in providing us with feedback on certain materials, product ideas, because they really want this to happen. They really are in great need of funding and of solutions like KUMO that allows them to participate in the market, like other players in other markets also participate in the market. And the thing is, if you look at real estate, I would say 99% is probably financed via mortgage loans. And how do you build houses? You need upfront investments because you need to buy a piece of land, then you need to pay the construction companies, the architects, and then after a year, 2 or 3, you can basically allow people to move in, and then the rent is kicking in. Current project development, you need to get a piece of land rights, or buy it yourselves. You need to get the workers on the ground that plant the seedlings. You need to do auto registration, which takes time. You need to pay for the auditors. And then after 3 or 5 years, you start receiving carbon credits that you can sell in the market. So there's a massive industries that runs on these collateralized loans. And we have a similar industry with similar problems and delays when it comes to cash flow and also the size of this project, where this is not available at all. So if we just look at financial primitives that we have in other markets, maybe that started evolving there 20, 30 years ago, I think that's for all of us in ReFi. Yes, innovation is what we need to do, but innovation is not meaning we need to change everything at the same time. It's like, okay, what are proven concepts in other markets? And how could this be applied to a market like the voluntary carbon market? Because it's a different market. And then use technology to bridge the gaps, to use existing funding vehicles, if it's funding, to build the technology so banks can just integrate with their asset finance department into this. That's what they do. That's what they do every day. They are lenders. They are used to take risk. It's not, don't need to cut out risk, just make it manageable for the banks. But not by saying everything is new, is 10 times better than everything you've seen. Just maybe say where there's an asset, you cannot use it. We have the technology to use this asset, to integrate it into existing risk management processes, compliance processes, legal frameworks, to then drive funding to this market. I think that's for my learning journey. Sometimes it feels like, where's the innovation? Because being in DeFi for such a long time, it feels like, okay, of course I know that it works. That's why I want to do something else. But translating innovation from DeFi into products that work in institutional finance, that's really where we need innovation. Because translating this is like completely different languages and levels that we are there.
Yeah, and ultimately the translation is about what's appropriate in that given time and market context for the audience which you're called to serve. I think there's this techno-solutionist drive that's been born out of all of the interesting tools that are out there, which is like, great, we have these new tools, what can we apply them to? And actually, the best startup founders are those that can really be clear about a long-term vision, test their hypothesis, and watch their customers use the product and react with emotion, frustration, disappointment, and listen to what they actually need through that engagement. And it feels like you guys are really leaning into that and doing that. And yet there's also this really interesting connection because now the supply is coming on chain. And I think this is one of the key things when you first shared with me this vision of a nature 100%, carbon-backed stablecoin. I was just like, where are you going to get all this supply? And not only getting it, but getting high quality supply that's diverse. And if you have, the kind of historical precedent where carbon credits, the older vintages are worth less money, like how can you balance this portfolio to ensure a really stable asset amidst the kinds of volatility that we see in DeFi? And so I think it's an interesting initial kind of breakthrough that you guys are having, because there you have now project developers who probably weren't the actors who were bridging carbon credits on chain in the past. I think it was mostly brokers. But now there's project developers who are getting this first taste of saying, okay, I can tokenize it because of these reasons. Suddenly now it's collateralized and I can get cash from this. Like, great. Of course, they're going to go to that extra effort. And on the bank side, they're interacting with the capital and currency that they're familiar with. They're getting exposure to nature and, fulfilling these mandates as you described. And so it totally makes sense. I would love to play with this composability layer now that we've understood, okay, we've had to dissect some of the technology, pull out parts that weren't relevant and suitable for the market at this snapshot in time. But what happens when you can bring in, Toucan and Solid Worlds and Thalo and all these different actors, and what kind of products and services could be built upon this increasing, archive of, collateral of carbon credits in the protocol?
Yeah. So speaking for KUMO, we're a startup like many others, and our job is to build scalable software. Scalable software means we cannot manufacture everything for every tiny bit of change. So composability, DeFi. We stick to the same standards, ERC20, 1155, and stick to the same core principles. So when we have all these tokenization partners building this, and we can trust in their infrastructure working properly, it's from a software development perspective very easy to integrate all these different assets. It's the ecosystem or network effect then. And then they can all be integrated in KUMO, but also integrated in others. And we start with this collateralized lending. That's really the core of our solution. But for example, one need from project developers is, now you're a project developer, you have future carbon credits, they're tokenized. You borrow against them, you use the money, you spend it. That's why you need the money for. You need to invest it to keep going. At the same time, you find an off-taker of your credits who wants to purchase your high-quality carbon credits, but you don't have the money to repay your loan. So in DeFi, what's very easy to do, or not very easy, but scalable in a way, is providing escrow services. Smart contracts can be the trust anchor here. So the off-taker, whatever company it is, they just wire the money to the smart contracts. We cancel the debt from the project developer in our system, all automated, and the project developer receives the remaining funding and can use it to further do their operations and really build this. And yes, the stablecoin thing is a little bit down the road, a little bit later, but we built the first pillar of it. It's a collateralization engine of carbon credits, of eco credits, can also be renewable energy or biodiversity. And also, we need to keep in mind that, yes, we have truly decentralized stablecoins, but does the majority of the end users really care about that everything is completely decentralized? Because what means decentralization? Even a smart contract, there are some people writing these smart contracts. There are some auditors auditing it. So it's decentralized, and we can cut out some intermediaries, but they're still intermediaries. We need them. And that's an important thing. Otherwise, it wouldn't work. So also thinking collateral, does everything need to be tokenized that will be used as collateral for on-chain products? I think it doesn't. As long as we have proper bridges in place that don't have too long delays, that have proven methods going back and forth, and then really doing what is needed. Take the bridges when we get there, and not saying, let's tokenize everything, let's put it on-chain and see what we can do with it. Tokenize what is needed to create use cases for tokenized carbon credits that build on top of this infrastructure layer. And now we have standards and registries like Vera that are not moving much into the directions of tokenization, which is okay because they have lots of these quality issues that they need to take care of, which is super important that we get the integrity and quality level of carbon credits improved. But why should they tokenize in the first place if they don't see the value add? And if we DeFi people approach them, say, well, you're standing in our way, we want to tokenize and do all this DeFi casino, beautiful things, we can change the world. No, of course not. But what if there are project developers who approach Vera and say,
different.
We want to get access to funding, as an example. What we cannot with our credits in Vera, why cannot we tokenize? Yeah. Or when you have the options, let's say, it's biochar credits. You have Vera biochar credits and you have pure biochar credits. And now you as a project developer decide with what standard to go. Here you can get funded, here you cannot. Where would you go? Yeah. And I think this is more like how we as a ReFi ecosystem should think about how can we support these registries and standards in moving towards tokenization, having real use cases, pilots with real customers that are their existing clients and not our DeFi customers. And then approach them together with them or let them do the work, saying, well, why isn't it there? And always try to push more on the technical level and not on the, I think, on the solarpunk future that many of us are working towards too. But it's technology. Do you care if the email provider uses IMAP or SMTP or POP? Probably not. Right. But
not unless it breaks.
You're very well aware how to use Gmail and all these others and see it more like this. This is like also learning. I mean, I have a technical background, so I love the tech. And it's very hard to be in between really innovating in technology and to building a business that can find traction today. That's not so attractive from maybe the pure technical perspective, but it solves real world problems. And then take it from there, bring it to the next level. And then the market will tell us where we need to go.
Yeah, man, there's a lot in that. And I actually want to unpack some of what you've shared regarding the registries, the project developers as a signal of demand for tokenized carbon. Because right now, as far as I understand, we can't tokenize any of Vera's credits because of the ban. Gold Standard's gone ahead and said, hey, we're going to pilot this with 5 organizations. But it was a long time ago that they announced this, and we haven't heard anything. We saw a recent Toucan announcement around a bridge with Pure Earth, but I haven't seen volumes coming through this. It's a kind of partnership, but there's no CDR tokenized yet. So really the only option for you guys right now is, I guess, Solid World, right? Using their forwards for mangroves and cook stoves. Is that correct?
Yeah, that's what we have launched. But we granted the first 2 loans to leading project developers and used the CRISP M tokens from Solid World. So these carefully analyzed and rated mangrove restoration projects and its future emissions. That's what we started with. And next year we're heading towards Pure Earth as the next step. And then waiting for all these others. But again, we don't need tokenized carbon credits to do something. It just improves our solution, our capabilities. And if we think about like de-risking, it's just a different risk profile. So probably if we cannot use tokenized carbon credits, the project developer would need to pay higher interest rate to these banks or the asset managers that drive the funding. And that's really how can we build a better solution. But also it's like we need to think about true optimization and not like the perfect solution. And if currently project developers pay 12% and they can pay 10% with non-tokenized carbon credits, probably when all the risk management is in place, way lower rates. It's all improvements and it's all going in the right direction. But yes, we need volume. Volume is key. That's also the promise of DeFi.
Yeah, totally. But it's great to see Solid World providing this key element of the market. You know, they launched a bit before you guys and have been gaining good traction. They're getting good liquidity providers. And it's quite a fundamental innovation to have these forward credits tokenized. And, people are getting good yields on supporting that platform. And now this enables the next step for you guys to use this as collateral for lending. So it feels like we're kind of snowballing towards the next cycle of, the regenerative finance movement. I'd be curious to unpack, almost the black hat here, which is to say, how could this system go wrong and what are you doing to put guardrails into place and ensure that this maintains an appropriate level of leverage and risk within the market? and that this doesn't spiral out of control, and really defending it against bad actors, I think. What have been your kind of exercises, and what are the different scenarios that you're looking at to really ensure that, you know, this works as a healthy, functional financial service for the market and doesn't get over leveraged and result in a downward spiral that we've seen in other environments?
Yeah. Very good question. One thing is really trying to find a sweet spot between the speed and the intensity that we have in DeFi in combination with the carbon market and traditional finance. So questioning, do we need to launch like project tokens and having all this as a decentralized DAO structure at the beginning? Do we need this at all? Really taking out all these layers of complexity and the gambling aspect, because you can make money without gambling. There's a problem, and people are willing to pay for it. So connecting these, then it's patience. When the carbon market is not there that we can drive like hundreds of billions, then we shouldn't try to do this by building like all these derivative products, leveraging tools, options, only for the sake of liquidity and promised financial returns. In our case, it's also working with institutional finance and not with retail customers. I mean, not saying we will never want to work with retail customers, but investing in the carbon market is high risk. Even with KUMO, you need some expertise to make an informed decision. So we try our best, but it's still an asset, it's an investment. It's always risk and returns. There are no returns without risk. And working with these financial players, also use them as a temperature check to how do you think about this? How do you see this in other markets? What is what we can learn? To focus on maybe do another pilot before we really drive some crazy volume. Because worst thing in what could happen is for us, we damage the voluntary carbon market with like its image and reputation, but also it's people, right? These project developers, they need to provide for families, and they have, I mean, many of these project developers are based in Europe, but the projects, they are maybe in Senegal, maybe in Kenya, and they have a very strong focus on how they can improve the well-being of these communities. And if we mess up, we directly damage people. And that's what we don't want to do at all. So don't promise what we cannot deliver. Rather say, well, if you want to do this, it will probably take another month or months until we can really have the solution in place to build a long-term financial product that will then be ready with the market when the carbon market hits to really drive funding at scale to all these projects where it's needed.
Totally.
But I think, I mean, the crypto market is maybe a little bit bullish, maybe not, we don't know yet. But we should be careful with the next generation of products that we build that link financial returns investments to nature. We shouldn't speculate too much on nature. It's our most precious asset. We should try to make sure we drive funding there, we support it, we protect it. And yes, I'm also a believer of there needs to be economic returns with the protection of nature. We're still in a capitalistic system, which is okay because it's very, very good in creating efficiency and driving funding to markets and really creating these ecosystems. And money is energy. But you cannot have infinite energy at all the time. So as much energy as we can really take in, drive this to these projects, and rather focus on real use cases than on, okay, there's a product, let's forget and let's just do it with carbon credits. There's another product, it worked quite well, like whatever thousands API, just forget and let's plug in carbon credits. I think that's what we shouldn't do. It's rather working with the people that are in this market and see if there are ways for them to improve their business as of today from the financial industry, but also project developers, brokers, traders in the carbon market, and see if we can build something with and for them. And then use DeFi more as a tool, as part of the solution or the stack that we offer to help usher into this next generation of the carbon markets but also ReFi for us.
Absolutely, man. Yeah, I think there's a lot there, focusing on institutional capital, educated lenders who really do understand the risks, and this matches, the mandates they have to diversify their portfolio towards nature. And also, I think building a very strong user experience for the borrowers who really understand the risks and, the liquidation thresholds, and having good notifications and making sure that people aren't taking on more risk than they should be doing, I think makes a lot of sense. And the fact that people can also pay down these loans in fiat and not have to be worrying about, a crypto interface in between makes a lot of sense. And I think we'll definitely see, hopefully, a gold standard pilot in the new year. And these are all, little contributions to this snowballing movement that we've built together. And I think between this conversation with you and also with Adrian from Senken, there's also a level of kind of entrepreneurial maturity that's increasing in the ReFi space. I think we all came into this with a lot of exuberance, sometimes irrational, sometimes rational. People who want to take the challenge of a complex existential crisis in their own hands does sometimes provide a little bit of delusions of grandeur, but we got a lot of people who want to make a difference and tools that are incredibly powerful. And now I think there's this evolution of figuring out, okay, how do we apply these tools in the right way to serve this market's needs? And, make sure that our egos are on the sideline and actually we're very focused on solving the problem here and building something that people actually want, I think is really key. So it feels like we've gone a good trajectory here through your guys' journey, this launch at COP at 28, what you've built to date, the larger vision of a nature-backed currency. I'd be curious to get your take on what's the next 6, 12, 18 months like for KUMO, and also how do you think the broader market in carbon, the broader market in Web3 will evolve over that time frame?
Yeah, so for us, we want to use all this momentum that we have at the moment and to execute, to run these pilots, to really learn with the mainly financial institutions of how we can get access to institutional capital. Because if we can unlock this, or more towards a little bit bigger, is what if carbon credits could free up regulatory capital from banks? This would unlock tremendous funding for the voluntary carbon market. So starting with this in mind, working with these banks, with the regulators in mind for next year, then it's really the project developers. It's when do they need funding? At what time of the project? Do they need all at once? Is it maybe better to have a sort of revolving loan that renews every year? Really, how can we build these products for them? And also under the return layer, is it better to pay returns in fiat money, or is it better to pay returns maybe in carbon credits or in options? So could be many different directions. For us, it's really next 12 months bringing this MVP to a commercial product. That's it for us. For the broader Web3 carbon market ecosystem, I think we will intensify the intersection of the different products and projects. We have this infrastructure product, but also there will be more projects that build on top of these like KUMO. And there are ways that they overlap and can work together. So to give you an example, now you have a marketplace and you hold carbon credits. Maybe you're the project developer yourself and you list your carbon credits on a marketplace. What if per default there is a liquidity layer integrated in these marketplaces where you list your carbon credits and you already get 50% of the cash flow coming in just by listing it with a collateralized loan that's coming through KUMO? Maybe it's not the KUMO UI, it's the marketplace. And having these solutions more integrating each other. So cash flow for these project developers accelerates again. And how can we interact with each other, like this composability thing? That's what I would love to see in the next 12 months. Yes, what we will see is building companies like KUMO that build on top of the infrastructure layer. But I really would love to see companies like we and others working together to then provide this 10x product that we cannot build in traditional finance.
Super cool, man. I'd love to unpack that example of the marketplace just a little bit in terms of how that would work. I think that's a very interesting illustration of the composability of these tools and how this can really unlock unique value that cannot be delivered without them. Can you just break it down a little bit between, the marketplace, somebody who's supplying carbon credits? You mentioned the word liquidity, and then there's also cash flows that would be coming there. Can you just go a layer deeper and unfold this? I think it's an interesting insight.
Yes. So a marketplace connects, in this case, supply and demand. Supply is coming from holders of carbon credits. We can just limit it to carbon project developers in this. So you develop your project, you receive your carbon credits. Now you want to sell them to the market.
Yep.
Maybe you don't have like an OTC deal, a direct off-taker. So you want to get exposure to a variety of potential purchasers. What you will do, you go to a marketplace and you list your position there.
Yep.
What happens with your asset is basically nothing. It's sitting on your balance sheet and it's up for sale. So no income. And what I have in mind in this is, what if you list your carbon credits on a marketplace that integrates with liquidity layer like KUMO? So listing your carbon credits provides you with access to a collateralized loan. So now, rather than just listing your credits and waiting for you don't know for how long, you list your carbon credits and you can draw a loan directly against your carbon credits at maybe a loan to value ratio of 50%. I mean, the values, that's what we need to figure out then. But listing is already providing you with income. The cash flow starts at the time of listing, not at the time of selling your carbon credits. And then think again as a marketplace. I mentioned before, like if you can decide between you have liquidity enabled Pure Earth credits and maybe not with Vera, where would you go? Pure Earth. No, you have a marketplace where you can list your credits and you get direct income or cash flow, or you don't. Where would you go? And this is for me the promise of DeFi. And now the next generation is, at the moment, in our case, it's loans from traditional finance. And this is our focus. But also I mentioned we would go with the market. If there is appetite for providing liquidity as DeFi loans and stablecoins, and then we have, again, the concept of pooled liquidity. So basically there's liquidity waiting to be deployed, to be borrowed. Then this really builds a beautiful solution there. So you have these DeFi products, DAO treasuries, protocol treasuries that, I mean, these are all also people like you and me, John. So we all care. So what if you can allocate some of your funds into sustainability-linked investments and still receive returns? So really these DeFi protocols could also provide liquidity to the KUMO protocol or this marketplace. And then there's liquidity at hand when a project developer comes with a high quality project that meets all these requirements to then directly draw from this liquidity pool. And when they sell, we can automate all the transactions and smart contracts, these escrow services. The pool receives these returns, carbon credits receives funding, and whoever is the lucky person who gets access to this high quality carbon credits receives the high quality carbon credit. I think that's really what I want to see. Hopefully the next 12 months. But I'm sure we'll see it in 25.
Who knows, bro? You guys have been moving at a rapid pace, and it's a real joy to spend some time with you today. I know you've got a lot of spinning plates on at the moment, and there's a lot of demand for your guys' time. Is there anything that we didn't dive into today before we wrap up the conversation? Anything that we didn't get a chance to explore?
I think we explored everything. I just want to encourage everyone from the first wave of ReFi, like you and me, keep on building. There will be better times for us. Rethink what you do. Maybe step away back, take a break, take some weeks to reflect, and try to do it without DeFi first. If you cannot figure it out, then maybe use DeFi. I think that's really a call to action because planet Earth doesn't care. And to be honest, no one or most of the people don't care about the how. It's just like, what do we provide? What's the service that we can offer? And I also promise you, DeFi is still powerful. There are many, many use cases we can just do better with DeFi. But it's good to start with a fresh mind and rethink, do it together with your team, maybe together with someone who has no idea of DeFi. And also, don't want to promise too many things, but I can only tell from first-hand experience, it helped me and us at KUMO a lot to really step back and rethink and approach it differently.
And get out of the building. Talk to your customers. Talk to the people who are experiencing problems on the front lines, who need capital today. Those are the people that I feel called to serve, at least. And those people who are doing the work, our future in many ways relies on them. But man, it's really, really nice chance. I feel like I've caught you at just the right moment, and I'm super excited to see where this all goes and all takes off. Just as a closing thought here, what have you done personally in your life, either as a morning routine or anything in particular, to kind of stay centered and grounded amidst the volatility and the roller coaster ride of running a startup in two of the most, highly volatile industries? Do you have any, personal practices or rhythms that you adhere to?
Yeah. So to me, it's mainly running. So running is my meditation, and I also meditate every morning, but running is where I can really go deep and settle. And it's also experience. The question is, why do we hustle so much? Most of the time because we want to drive more outcome, but we are limited. So we can have sprints. We can work like 60, 80 hours for weeks, but not forever. Mm-hmm. And we are more efficient and effective sometimes when we work less. So taking a break increases your productivity. And this is a learning I had the last probably 10 or 5 to 10 years. Is I work more when I work less. I'm not saying I don't work a lot, probably still too much, but these crazy hours, they are not helpful. Try to find balance in yourself. This is different for everyone. Surround yourself by people that inspire you, that you love, that love you in return. And don't always run. Sometimes hit the pedal and brake a bit, slow down, and release it again. But find the direction where you want to go. And when you have a direction, go all in. But sometimes it's hard to find the direction when running all around all the time.
Man, huge words of wisdom. I wish I would have had you whispering in my ear some 18 months ago when I started ReFi DAO. I could have definitely used the break between Toucan and ReFi DAO, but I just sprinted straight through into the next thing, and it's been a wild ride. And so grateful to have been able to connect with founders like you, man. You're a huge inspiration, and very much looking forward to meeting in the flesh, celebrating this milestone. And I hope you have a great rest of your day. Thanks for coming on, and let us know if there's anything we can do to help, man. It's a real pleasure.
Thank you very much, John. I enjoyed it a lot, and thanks for leading the ecosystem for such a long time. All the best.
Pleasure, brother. Great to contribute. See you, man.
Bye.
Thanks so much for tuning in. I hope you enjoyed the show. I would be so incredibly grateful if you could leave us a 5-star review wherever you listen to your podcast. This helps us reach more listeners, attract amazing guests, and ultimately get the story of regeneration out to a wider audience. It takes just a couple seconds and makes a massive difference. Thanks so much. And do let us know if there's any guests that you'd love to hear from. We'd be very grateful to hear from you. Thanks.